The stage lights were bright, cameras flashing as Donald Trump stood before the world, his voice cutting through the noise. He called it a deal for the ages. A $550 billion pact between Washington and Tokyo. Historic, record-breaking. The kind of agreement that, in his words, would reindustrialize America. It was all celebration and spectacle. Flags waving, executives clapping, the press capturing every grin. For a few days, it seemed like the start of a new golden era. Then everything collapsed. Japan pulled out. In a stunning live address, Japan's new prime minister announced that her government was canceling the deal, calling it a threat to our national security and financial independence. The words hit Washington like an earthquake. According to Reuters, Tokyo froze all payments, refusing to release even $1 until the U.S. surrendered its authority over how the funds would be used. The yen plummeted. Markets convulsed. Trump fumed behind closed doors. Because this wasn't just a trade dispute, it was a turning point. Across Asia, from Seoul to Jakarta, governments were beginning to whisper the same question. Has America finally lost its hold on its allies? On October 1, 2025, Japan's chief negotiator, Ryo Akazawa, faced reporters with calm defiance. He rejected claims that Washington would control Japan's $550 billion investment, insisting that Tokyo would oversee every yen through its own institutions. It was diplomatic language, but its meaning was crystal clear. Japan was drawing a line. Within hours, investors understood the implications. The Trump-Japan partnership, celebrated only months before, was hanging by a thread. Trump had announced it on the White House lawn in July, surrounded by CEOs from Detroit, Houston, and Silicon Valley. He'd promised that tariffs on Japanese goods would drop from 27.5% to 15%, while billions of Japanese capital would pour into American factories, shipyards, and semiconductor plants. Bloomberg quoted him saying America would keep nearly all the profits. It was headline material, a victory speech disguised as policy. But inside the negotiation rooms, diplomats were warning that the deal had no legal weight and that it tilted dangerously in Washington's favor. In Tokyo, that truth exploded into political chaos. Then Prime Minister Shigeru Ishiba had signed the agreement after months of pressure and tariff threats. By September, his approval rating was in free fall, below 20%, and critics accused him of trading Japan's sovereignty for temporary peace with Washington. The Financial Times later called his resignation the cost of surrender. And out of that chaos rose Sanae Takaichi, Japan's first female prime minister, sworn in on October 4, 2025. Her message was uncompromising. Japan would protect its autonomy at any cost. The Wall Street Journal described her leadership as a return to conservative discipline, shaped by the spirit of her mentor, Shinzo Abe, strong defense, cautious diplomacy, and zero tolerance for foreign control. In her first national address, she made her position unmistakable. Any agreement that harms Japan's interest will be reviewed. That statement sent a chill through Washington. Commerce Secretary Howard Lutnick, who had designed the trade framework, tried to reassure the press that the deal was moving forward. But in private, Treasury officials were alarmed. They suspected Tokyo was preparing to reroute its money through domestic channels, keeping U.S. hands off Japan's assets. Days later, Reuters confirmed it. Tokyo was creating a new state-backed investment vehicle inside the Japan Bank for International Cooperation, a quiet maneuver that meant every cent would remain under Japanese supervision. Markets reacted instantly. The yen climbed slightly as traders bet Tokyo would delay its dollar transfers. Stocks in U.S. defense companies, supposed winners of the deal, dropped almost 6%. Analysts at the Financial Times called it a subtle rebellion against American leverage, and the resistance spread. In Seoul, South Korea, which had agreed to a similar $350 billion framework, began rethinking its position. A senior advisor told Reuters bluntly, "We cannot pay $350 billion up front. Trump had insisted the money come immediately." Korea said no. The pattern was clear. America's allies were no longer following its lead. At the White House, Trump's frustration boiled into public view. During a televised cabinet meeting, he slammed his hand on the table and shouted, "We made the best deal ever, and Japan's walking away." But instead of softening its stance, his administration doubled down. Bloomberg later revealed that Lutnick had ordered the creation of a new federal office, the U.S. Investment Accelerator, which would decide how allied capital would be distributed, from energy projects in Alaska to semiconductor hubs in the Midwest. Partner nations would be allowed to consult for 45 days, but not to decide. To Tokyo, that was the final insult. At another press briefing, Akazawa delivered a carefully worded warning. Japan's contribution will be managed in a way that ensures stability in currency markets. Traders translated that instantly. Japan was controlling the tempo, and could freeze the process entirely if it chose. This wasn't supposed to happen. For decades, Japan had been America's most reliable partner in Asia, a cornerstone of Washington's Indo-Pacific vision. Now the same ally was resisting the largest economic plan the U.S. had ever launched. But the roots of the confrontation stretched back years. When Trump reimposed 25% tariffs on foreign autos, Japan retaliated with what the South China Morning Post called a rare act of defiance. Then Prime Minister Ishiba had promised his people, Japan will not be pushed around. That defiance never disappeared. It only evolved. Under Takaichi, it became strategy. She leads a country torn between two powers, cautious of Beijing's ambitions yet unwilling to live under Washington's shadow. Her approach, described by Nikkei as strategic balance, is simple. Strengthen military cooperation with the U.S., but demand equality in every negotiation. Her advisors say Japan's post-war stance, obedient and dependent, must transform into one of equal partnership. Meanwhile, the stakes for Washington couldn't be higher. The White House claims the trade plan would create 700,000 American jobs and revive industries long abandoned to globalization, shipyards in Alabama, LNG plants in Texas, microchip factories in Ohio. It was meant to prove that tariffs work, that America first could build again. But the reality now looks very different. Across Asia, quiet resistance is spreading. Japan, South Korea, and others are no longer following America's blueprint. They're writing their own. And as Tokyo reasserts control, the once celebrated deal Trump called the greatest ever is dissolving piece by piece. Not through revolution. Not through war. But through silence, strategy, and the slow withdrawal of trust. What began as America's proudest economic victory may be remembered instead as the moment its allies learned to say no. Billions of dollars are already flowing into shipyards across Alabama and Texas, a promise of revived industry and political triumph for Donald Trump. According to Bloomberg, financier Howard Lutnick called the initiative a way to rebuild American industry without costing the taxpayer a dime. For Trump, that line is gold, a simple message proving tariffs bring results. But halfway across the Pacific, Japan's economists see a looming storm. A secret finance ministry report leaked to the Asahi Shimbun warns that sending huge investments overseas could strangle growth at home and increase fiscal danger in a country already carrying debt more than 260% of its GDP. Even modest transfers, the memo said, could spook investors and shake Japan's already fragile bond market. In Tokyo's business circles, the mood has turned restless. Suntory CEO Takeshi Ninami, who also leads Japan's powerful Keidanren business group, told the Financial Times that Japan's push for total tariff exemptions was a tactical error. Yet, he added, the American proposal is just as flawed. It offers big promises but no details on where the money goes or what Japan actually gets back. We signed the headline, said one executive, but not the fine print. The Showcase project, a $44 billion gas terminal in Alaska, was supposed to be the proof of concept. Instead, it stalled. Reports from Reuters reveal that Japanese energy firms doubt the math, citing rising construction costs and a soft global market. Privately, one insider admitted, everyone here is just waiting for a way out. Trump's team insists Japan stands to gain energy security, closer defense ties, and a stake in what they call strategic realignment. But even American analysts sound skeptical. Christy Gavella, chair for Japan Studies at the Center for Strategic and International Studies, told Politico that the deal is official enough to be public, but not legal enough to be binding. In other words, it's a handshake with flags attached, enforceable only by politics. By early October, the illusion of unity cracked. Japan canceled a major trade visit to Washington after finding mistakes in U.S. tariff paperwork. Economy Minister Akazawa demanded a corrected version. The White House said no. The Associated Press later reported that the cancellation derailed Trump's planned victory tour. Financial papers across the Pacific began asking a new question. Is America's pressure-based trade diplomacy pushing its allies away faster than China ever did? The Wall Street Journal noted that Beijing wins influence with loans, while Trump tries to win it with fear, a mirror strategy with sharper edges. Inside Tokyo's cabinet, Prime Minister Takechi's advisors debated three painful paths: comply and face public backlash, renegotiate and risk retaliation, or delay indefinitely and test Trump's patience. Nomura Securities analysts suggested a loophole: stretch payments over a decade to appear cooperative while dulling political damage. But word of that plan reached Washington. Lutnick warned delays would have serious consequences, hinting at new tariffs, though few in Tokyo believed the threat carried weight anymore. In the U.S., corporate support began to erode. Factory executives who once cheered Trump's industrial nationalism now feared chaos returning to their supply chains. "We wanted growth," one manufacturing leader told the Financial Times. "Not another trade war with our biggest buyer." Meanwhile, Taiwan flat out refused Washington's proposal to shift semiconductor production to U.S. soil. South Korea quietly turned to the European Union for alternative supply chain deals. Across Asia, governments began charting their own course, a shift from compliance to independence. At home, Japan's public opinion hardened. A Yomiuri poll showed 61% of voters believe the U.S. deal favors America, while only 14% want it enacted now. Behind closed doors, the Bank of Japan modeled the financial risk. Even a partial $200 billion capital outflow could drive the yen down 6%, enough to disrupt inflation control and raise import costs. For Takechi, that risk was unacceptable. "We can't jeopardize stability for symbolism," a senior aide said privately. But to Trump, Japan's hesitation looked like weakness. In speeches, Trump began casting the dispute in moral tones. "America stands for fairness. Those who back down stand with China." But in Tokyo, fairness means sovereignty, the right to decide without foreign dictates. What started as a trade plan was now a test of pride and principle. Behind the press statements, both sides were bracing for a rupture. The Wall Street Journal reported that the White House was preparing unilateral tariff measures if Japan delayed further, while Tokyo quietly drafted counter-tariffs on U.S. farm goods. Managed trade was dead. Brinkmanship had taken its place. By this point, the standoff had evolved beyond economics. For Washington, the agreement represented a new doctrine: allies must fund American strength. For Japan, it reopened an old wound: the fear of being economically steered by another nation. IMF analysts warned that if Japan pulled back completely, global capital could pivot toward Chinese-led networks like the Asian Infrastructure Investment Bank, reshaping the balance of power in Asia. Such a shift would be historic, a loyal U.S. ally choosing autonomy over subordination. As of this week, Reuters reports that Tokyo still hasn't approved the final transfer. Akazawa insists the discussions are ongoing and cooperative. But inside the ministry, officials privately admit they expect tariffs to return soon. That prospect raises a deeper question. If Japan refuses Washington's terms, what lesson will others take? From Seoul to Singapore to Jakarta, capitals across Asia are watching carefully, waiting to see whether Japan's defiance will earn punishment or respect. Because behind the billions, the promises, and the politics, something larger is at stake: the question of who truly commands the Pacific century. Will Japan yield to pressure, or has it just drawn the line that could mark the end of America's economic dominance in Asia? Thanks for watching. Don't forget to like, subscribe, and check out the next video now playing. Because what's unfolding between Tokyo and Washington could rewrite the future of global power.